Welcome to the Rick Helps Real Estate Show. What is a delisting? You listed it, you took it off, it's been delisted. And there's a report out there, there's a headline. I was reading about it yesterday. Delisting surge as housing market teeters towards correction. Now, there's a lot to take into consideration with this article talking about how many expired listings are out there. We're going to talk about what this article says, and then we're going to look at our local numbers and see what the possibility is of some of the scenarios they're laying out here and how that might show up. And they talk a lot about shadow inventory. Now, we've heard the term shadow inventory before, particularly in 2012, as we had that great foreclosure crisis, and we were told that the banks were hanging on to all these homes and they are going to suddenly appear. And then we're going to have so many listings that values are going to plummet once again, and it just never materialized, mostly because they were gradually being bled off and picked up by investors. So we didn't see that spike in shadow inventory. The argument here in this one here says that the beleaguered U.S. housing market is showing new signs of strain. Certainly going to talk about that. With a surge of delistings, declining home sales, and growing unsold inventories, raising concerns about a potential price correction. According to the Wall Street Journal, nearly 73,000 homes were pulled from the market in December 2024, a whopping 64% increase from the same month a year earlier. Now, I addressed that here in Arizona when I saw the expired listings spike January 1st. I was like, wow, look at this. Well, what happens? People list their homes and they base it on a calendar date. So they say, okay, I'm going to list with you, Mr. and Mrs. Agent, 3 months or 6 months. Some people list for a year. I don't know why they would do that. Well, a lot of people put a listing agreement out there and said, let's let this expire at the end of the year. So December 31st came, boom, everything expired. January 1st, you look, we had 2,500 expired listings. Now I look on the Cromford report, they don't list that many. We're kind of looking at different data, but when I looked at my local MLS data, it showed a huge spike of 2,500 homes. And we're going to talk about where we are today. The persistence of mortgage rate lock-ins is one major factor. We've beat that to death. Homeowners secured historic low mortgage rates during the pandemic are hesitant to sell, as moving would mean taking on significantly higher borrowing costs. We've all talked about that. The number of homes for sale in December 2024 rose by 16% to the same period in 2023. We saw that here in Arizona. But the result has been a shadow inventory of homes, those once on the market, now off, waiting to relist. Should sellers with homes suddenly be forced into the market by some macroeconomic shock, recession, or something of that nature, the sudden glut of homes hitting the market could put substantial downward pressure on pricing. I think that's true no matter what. If you have this huge macroeconomic shock to our economy and to our housing, you're going to see more homes listed, whether they were homes that were already listed and pulled off or just people losing their jobs. Now, in and of itself, people losing their jobs doesn't necessarily mean they're going to put their house up for sale. They've got some savings. They're going to try and stay put because those people have those low mortgage rates. Are not going to find a better payment out there. It has to happen in mass, and anything's possible. But let's take a look at where we are, because we're taking a look here and showing our expired listings per month. And here's the number of December that I talked about. They show 1,048. I show twice that amount that came up. We also showed a lot of expireds in 2022 in December, which is at the end of December. Now, where are we at now in February? Well, we're January here. We're sitting at 569, February 327. The numbers I pulled up this morning on my 7-day moving average, as of March 1st, today is the 2nd, we have 750 expireds, about 100 more than normal that we see over a 7-day period. So the spike didn't happen March 1st. Now, I'm anticipating, spitballing, guessing, prognosticating, April 1st is going to be a whole different story, because I think people listed their homes and said, well, let's try it for 90 days. Let's see if we can get these sold. If it hasn't sold by April, let's let the listing expire. April 1st, that's 750. I think it's going to be back up to 1,000, if not higher. Now, if it's not, because I see, and I did a community survey here and said, you know, what are you looking for? Are you, of those of you that listed your homes, how many of you have to sell? And 24% of you said, well, I have to sell. Okay, that's really about normal. 47% of you said, I don't have to sell. I'm just trying to see what I can get. And another 20-something percent said, well, if I don't sell, I'm just going to wait. I'll wait for better times. So the have to sell crowd is relatively tiny from a percentage point. So the people that are listed now, there's more than half of you saying, if it doesn't sell, it doesn't sell. I'll take it off. I'm going to stay put. Now, there could be economic forces that could force their hands and say, all right, you're going to have to make a move now. I don't know. Going to watch and see what happens. When we look at our market here and we look at the Crawford Market Index, you can see that everything is down, 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 down. And that is a measurement of supply and demand. But when you look at the Crawford Market Index as a predictor of price appreciation, we can kind of see some things here when we look at history, and especially when people like to go back and look at 2008. Take a look at this. This little run up right here. This was before prices actually took off. Then look at this sharp downturn that occurred, yet prices were still relatively high, but they started following. So the market downturn happened here. Then there was a lag. I'm going to show you on the magnifying glass here. There was a lag between the Crawford Market Index coming down and prices eventually starting to show downward pricing pressure, which is the blue line. You can see what happened. So where are we at now? Well, it's fairly flat now, but still declining. And prices are coming down as expected, but there isn't a sharp drop in pricing yet, except there was back here in 2022. So you can see the Crawford Market Index really took a big dip here, and then prices are starting to come down just a few months ago here. It was lagging. Show you on the magnifying glass once again so you can take a closer picture. Notice how the black line really started plowing down before, and then prices on the blue line down there at 2022 really took a dip, but it was obvious it was coming, folks. So what we're seeing now in the Crawford Market Index, which again is a measurement of supply and demand, is that, well, the demand's not there and the supply is increasing, and therefore we're going to see some pricing pressure, but the line is not severe, so expect this to happen slowly in the near term. The mix of sales that we have out there really hasn't changed that much. Everybody's talking about how many investors that we have out there. Well, it's still hanging around investors at 13.7%. We were rocking and rolling about 20% in 2022, 21% in 2022, and we've been hanging in this 13 to 15% range for most of the past 2 years. So the mix of people buying homes has not really changed that much. Active listings continue to grow. I kind of expected active listings by the end of March to be up here around 26,000 listings. I think I'm going to miss that. I think we're going to be about 25,000. So I'm close. We're going up about 500 a week, between 300, 500 a week, some weeks 800. So it's outpacing the number of contracts that we have out there, but not by an alarming scale. Now, I'm going to ask you this. Look at the link below. Have you signed up for my weekly newsletter? It comes out every morning at 7 o'clock. We go over this. I share with you the Crawford chart that I just showed you, and you can take more time to read it. You can read the commentary below. I also have a section here on interest rates and commentary from Mortgage News Daily, and then my opinion on the bottom. So rather than you starting the week saying, gee, I wonder what Rick thinks, there it is, every Monday at 7 o'clock. Now, the other conversation that's out there is sales is plummeting. Sales are going to get worse. Well, I don't think there's a lot of floor left. And here's what I mean. Here's sales per year. We are bottom fishing right there. We're staying right at last year's level, considerably lower than 2023. Now, if we go back and we look, let me take out 2020, 2021, and here's 2000. This one here is 2022. But let's go back to 2007. Okay, we're kind of at that level. And then sales did start to come down, but you couldn't get a loan. Remember that? Once the wheels fell off the wagon in 2008 and you could not get a mortgage, then we saw sales, which were averaging about 72,000 a month now, plummet to 54,000. But our inventory level spiked to 57,000 units, and people were still buying in 2006 and 2007, and then everything went south. So what happened in 2009? Sales started to come back up. So if we really want to look at a historical floor, I guess we could say that 2008 was the bottom. Pretty bad. Can we get there? It's going to have to be something pretty dramatic, my friends, before we see those kind of numbers show up. And right now, just based on where interest rates went this week, our new contracts rose by about 300 to 400 units just over the past week, and it's interest rate driven. Went from 7.03 to 6.7, and people said, okay, I'm going to pull the trigger. Not an alarming jump, and also it was enough where it's going to slow down the number of new listings that we see out there. But again, most of this is seasonal as well. Excuse me there. See the bottom number of the red line here? That mirrors what we've seen the past 1, 2, 3, 4 years. Pending listings go up as we approach spring, peak in March and April, and then start to do their own thing and start to slow down in the summertime. Get a few holidays in the way in November, December, and the cycle continues. So while we do see an increase in new contracts that have showed up, I'm not so sure that it means we're seeing a general direction in the market. I think we're going to see more and more of the same. But all eyes are on April 1st for me, so stick with me here and we'll take a look at it, and we'll see what happens with that number. That's a mere 4 weeks away. And as we're coming out of February, it's kind of going as expected as far as I'm concerned, muddling along, as we like to say. And here we go. So if you have any questions, shoot me an email, rick@helps.com. Take care.